ObamaCare individual mandate is gone as the tax bill is signed into law, but businesses all over the country are still forced to offer their employers coverage, their employees coverage. Apple Metro CEO Zane Tankel is here along with our panel on how Obamacare is impacting businesses. Zane, great to see you. Thanks for coming in. So the business mandate is still there. It obviously still affects you. Tell us how.
Well, people now have the option. And most didn't want it anyway. They were paying fines. It depends on the aging population of your labor force. So we have some thousands of people. Most are 30 or below in the restaurant business. It's a young person's business. They were forced to pay, I think this last year was $595 fine.
Did you have employees who had actually decided to pay the fine instead of getting insurance?
By far and away the majority.
The majority?
Yeah, because it was still much more expensive to buy insurance. It was well over $1,000 for them, even with the exchanges, et cetera, et
and
cetera.
These are people in their 20s. They don't think they need it.
They never had it. They don't know what it is, you know. So they said rather than get into the complications of buying it, it's easy to pay the fine.
Now, do they recognize? Have you explained exactly what's going to be happening here?
They're very happy. They found $600.
But you're not happy because if they want insurance, because the business mandate continues, if they want it, you have to supply it.
We do, but at least in our population of several thousand people, it's not something that they're running to do.
Let's talk about the general idea of the tax bill and how that will affect your business, and whether you're going to just pocket the extra money if you get extra money or invest it.
Sure. So neither of those two. Actually, how it affects us as a business is, I can tell you, David, that in February, people get tax refunds every year. And in that month, our sales go straight up like it was Valentine's Day or Mother's Day or New Year's Eve, because people have found money. Now it's going to be a weekly find as far as we're concerned. I think that we're already seeing the psychological effects of people having more money in their pockets. And I think it bodes extremely well for the retail industry, for us in particular, and the restaurant industry, and our space within the restaurant industry, which is casual dining.
So what do you do with the extra cash?
What, with the extra cash? You mean in terms of what corporate taxes are?
People are going to be going to the restaurant more than they did. Perhaps you're not going to be paying as much in taxes. You will have, I'm assuming you're thinking you'll have extra cash. Are you going to invest it, pocket it, give it in bonuses to your employees? What?
Well, let's start with what I'm not going to do. I'm not going to pocket it. My income doesn't change one way or another. Ideally, we'll look for more sites or new sites. We're in a difficult situation, or a space rather, being in New York City, because
real estate
rents are going only one way, although that's starting. People are getting realistic about drive up and down some of our avenues and see all the empty stores. So as those things happen, one man's crisis is another man's opportunity. So as this real estate thing looks like, smells like, feels like it's starting to peak and maybe start to come down, we would definitely use that cash for expansion. We would use that cash for reinvestment in our business. It doesn't go, as people say, or Democrats say, and I don't want to make it a political situation, that people take more money. Most corporate heads, I'm a private company, are under contract with the stakeholders, right? So if there's more money that comes into that corporate entity through taxation, it's not their income. They're dealing with the public's funds. And so they don't turn around and say, oh, I make $4 million, I got a big tax cut, I'll take $6 million. It doesn't work like that.
Veronica, let me bring you back to the business mandate of Obamacare. Why wasn't that cut out as well as the individual mandate? Was it just a matter of trying to pay for the tax cut, or what?
It could have been. That's a good question. I mean, individual AMT remains, and we wonder why that's still there, too. There's some overlying questions with this tax reform. You wonder, was it done too quickly on some aspects like that? I don't know. But it will be interesting to see if businesses, now that they do have extra cash, will they hire more? Will they give people raises? Because many of these consumers of businesses, customers of businesses, are also the direct beneficiaries of this tax reform. So will that money come back into the economy? Will we see increase in corporate profits? And that in turn goes back to the shareholders. Stock prices go up. I mean, I think there's a virtuous cycle that could be happening. We could be on the midst of it. We'll see what actually happens in the new year.
Evan, let me bring you back to where Blake was talking about the complications in this tax code. I mean, it seems like the IRS really can't figure out exactly what the implications of the new tax law are. Am I right on that?
You're absolutely right. And that sound we all just heard, that's the sound of my dad losing his mind, because he prepaid his real estate taxes for 2018, and I think he might have just had a stroke, so I'm going to check in on him.
I think if he was able to prepay it, I think they'd have to allow that to stand,
they'd have to
although
allow
who
the
knows?
prepayment, but whether or not they'd allow the deduction is another question, and it's now muddied waters, and that's never good for the consumer, and I hope that you are correct, and I hope President Trump will come out and help issue an order to clarify
Zane,
this.
very quickly, we were hoping that one of the benefits, in fact, that's one of the ways it was being sold of the new tax law, is that you guys in the business community wouldn't have to pay as much for tax accountants.
Sure.
But I look at all these complications, I think maybe you'll pay just as much, if not more.
Maybe yes, maybe no. But in answer to Blake about hiring more, we're about at full employment now at 4%. There's not much more you can do in terms of employment, right? So in terms of expansion, in terms of reinvestment, in terms of CapEx, the Keynesian theory of a dollar is not a one-to-one tax cut. It goes $1 back into the economy. It's about a 1.8, maybe 2 to 1. So back to where that money goes, it recirculates, it spends. So that dollar cut might translate to $2 churning into the economy. Ultimately, it's wage increase.
By the way, I'm amazed you could afford to be here, because New Year's Eve is his night. That's where you make, what about probably more from that one night than a couple of months.
Well, let me just tell you what the per head price is, and you guys said, okay, $375 a head to go to Applebee's.
That ain't much.
Per person. If you get a window seat, it's $450 a head. We've sold out all our window seats. We're about to sell out all our seats.
Good for you. Zane Tankel, great to see you. Appreciate it.
Thanks, David.